Hello, and welcome to the fourth session of the Future of the Corporation Purpose Summit. My name is Colin, and it's my very great pleasure to chair this session. Let me just remind you before we begin that you can post your questions in Slido, and please vote on the questions you like so that they get pushed forward for posing to the speakers. In the last session, we focused on technology and the power of purpose-driven companies to use it to address the problems of people and planet. We heard the instrumental role that tech firms can play in transforming our lives, the responsibilities on them to do this, the inspired leadership that is required to achieve this, the need to demonstrate an avoidance of harm in the process, the limitations on technology, and the fact that people want to see a human in charge and be able to establish relations of trust. Firms will not necessarily always do this out of the goodness of their heart. One needs regulation to set the boundaries, but regulation should be sensible, nimble, and promote corporate purpose. And governments can play a key role in this as it funds and bails out business by requiring it in return to be purposeful. In this session, we turn to investors and owners, and two of the Future of the Corporation's other principles for promoting purposeful businesses, namely ownership and finance. We argue that ownership is not just about the rights of shareholders, but also their responsibilities as owners to uphold corporate purposes and ensure that the companies in which they invest deliver on their purposes. Furthermore, as investors in companies, they also have a role in ensuring that companies have the necessary long-term risk capital to support their purposes. We examine these principles by looking at them from a variety of different perspectives. A highly purposeful company that is owned by a major corporation and a B Corp. Someone who has run a major institutional investor, a large corporate, and employee ownership. What we want to understand is how can and should owners and investors support purposeful business, and what can they do to ensure that the companies in which they invest are really committed to their purposes? What in turn can investors and owners legitimately expect of the purposeful companies in which they invest? We start with Douglas Lamont, who is CEO of Innocent Drinks. Douglas, over to you.
Thank you, and it's a great pleasure to be here. For me, purpose is a topic very close to my heart and very close to the business overall. So very pleased to join you and share some perspectives from an innocent point of view. So if we could go on to the next slide, that would be fantastic. So at Innocent, we see the combination of purpose, vision, and values. Sorry, if you just go back one to that one, perfect. We see purpose, vision, and values as a combination. You know, purpose has been incredibly important to the business right from the beginning, but the combination of the why in the purpose, the what in the vision, and the how in the values has been what's really propelled Innocent and its success over the last 20 years. For me, you know, I use this as my job description, and this is what I very much focus on. And you know, helping people live well and die old has driven so much of our thinking and our decision making over the last 20 years. So whether it's helping our drinkers to live well and die old through making it easy for them to do some good with natural, delicious products, whether it's helping our employees live well and die old by creating a really great environment and culture from which they can, you know, have a successful career, whether it's helping the planet live well and die old. You know, sustainability has been at the heart of our business since the early 2000s. You know, putting recycled plastic in our bottles in 2003, in hindsight, seems a long way ahead of the current debate around plastics. But also helping those less fortunate than ourselves live well and die old, and a commitment to give 10% of profits to charity. So for us, it's the combination of these three things that has sort of sustained our thinking and really driven the direction of the business. In terms of today's particular topic, and if we go on to the next slide, in 2009, Coca-Cola made an investment in our business, and on the face of it, and at the time, many critics, world's largest soft drinks manufacturer with a sort of ambient-led business meets purpose-led, small, chilled drinks business was not one that many were predicting was going to end well. I'm delighted to be here 12, 13 years later to report that the approach that was taken has allowed the business to thrive. So right from the investment process, and great credit to Coca-Cola, they were very clear that they wanted Innocent to operate within its purpose, to deliver against its purpose. They wanted to give us the freedom and the operating structure to allow us to do that. And together we came up with this concept of connected, not integrated, where Innocent could take advantage of the Coca-Cola ecosystem where it felt it added value, but also operate against our purpose, vision, and values and continue to thrive, through doing so. And it's been, incredibly successful. We've built a really strong, trusting relationship with our shareholder. And on a wider kind of note, I think it's going to be increasingly important for big corporates to understand how do they, curate ecosystems of different different purpose-led businesses inside their larger corporates without being a kind of command and control from the center organization. So I know you've heard from Unilever over the last couple of days, and how they're building purpose-led brands. Collectively is going to be a really important model for people to learn from. And I think connected, not integrated, that we've had inside Coca-Cola is another one where we've been given the freedom to thrive inside a much larger organization. So if you move on to the next slide, just to illustrate that, Coca-Cola first invested in 2009, and since that point, we've quadrupled the size of the company, and expanded right across Europe and expanded now into new markets in Asia. And we've done that very much on a standalone basis, but being able to draw on the expertise and the financial capability of the company as well. And what I give them also great credit for is the mindset of long-term investing. They've allowed us to invest in the right way over a long period of time to build the business the right way. At Innocent, we talk about being good all round, balancing growth with responsibility, with delivering, growth, scale, and profitability, and getting that balance right is so important. And if you go on to the next slide, that's the second part of the decisions that we've made over the last 10 years was to become a B Corp. At Innocent, we know that being, setting a good example as a company, doing good as a company is good, but Innocent being good on its own doesn't really change that much. And we wanted to shout with a louder voice about the principles of balancing purpose and profit and people and planet. And the B Corp community, we feel, does that, really, really well. It's a rigorous assessment of your capability. So it really is, proving that you do what you say you do. But much more than that, for me, it's a movement of companies coming together to say, enough is enough. We've got to shift the image and the behaviors of business from greed to good. This profit-only focus model, clearly hasn't worked, and we need to find ways to put those things in balance. And I think that's what the B Corp movement does, amongst others. And as investors, thinking about, how you invest, investing in B Corps, is a really good way, I think, of future-proofing, investments. Ultimately, what we're trying to do at Innocent and what many other B Corps are trying to do is prove that this model works, and for us, prove that it works at scale, so that we shift the mindset of other leaders around the world to not just thinking that this approach is the right thing to do, the ethical thing to do. It's the smart thing to do, because look at Innocent, look at the Body Shop, look at Danone. They're outperforming their competitors. They're growing globally. They are hugely successful companies, and that's the point that I think we can get that exponential tipping point to lead us all to a fairer, a more sustainable future. if you go on, one more slide. The other thing I think about B Corp and as a leader, I think becoming a B Corp and being a B Corp leader has made me a better leader. It's made me a braver leader. It's made me more focused on getting that balance right. And right now we're building what I hope will be the world's most sustainable food and drinks factory. This is a big blending and bottling site in Rotterdam, where by being a B Corp, by having our purpose, we've really focused on how can we reduce the energy consumption of a building like this. And we think we've got it down to about 70% lower than a typical site. And on a windy and sunny day, because we'll have on-site power generation, we'll be able to run this very large facility totally off grid. And that could be transformational. As a B Corp, what we also want to do is make sure that we share those learnings. For us, sustainability is a team sport. We have to make sure that we're collectively learning from each other, and driving forward for collective outcomes. Because if we're not all learning from each other and sharing that knowledge, we won't move as fast as we need to do. And just my final slide would be great. Thank you. I just want to finish with one story. Lots of people come to Innocent to talk to me, to learn, to talk about B Corp, to talk about purpose and values and all the rest of it. And the more cynical end of that is, well, yeah, it's nice, isn't it? You do some workshops, you come up with some words, you put them on the wall, and that appeases some people that think it's important, but then you just get on with the day-to-day of business. And I couldn't disagree with that more. I think, purpose done well is incredibly powerful and can be transformational. And I'll just finish by sharing this story, which, I talked about our purpose up front, helping people live well and die old. And that led us to giving 10% of profits to charity, and led us to the Innocent Foundation. Obviously, as a food business, helping the world's hungry felt like an obvious place to go. What we also wanted to do, though, was make sure that we carried our values into the way that we ran the foundation. And I'm a trustee on the foundation as well. And what we found as we sort of learned about the charity sector was how conservative it was and how little innovation happened, because there were so many rules and structure around it that people were reticent to make change. Because if you committed £100,000, people wanted to know that 100,000 injections were being given, and those processes have been built, so why change them? We just didn't disagree with that, and we wanted to bring our entrepreneurial value into the charity sector. And what we said was, we want people to pitch us transformational ideas that if they work, we'll transform, which will be fantastic. If they don't, we accept that we'll lose our money and no good will have been served, other than a good lesson to learn that it doesn't work. Very early on, we were lucky that an amazing charity called Action Against Hunger pitched us this idea that they wanted to transform the way that severe acute malnutrition was treated. And historically, it was all done in healthcare centres, because you needed a doctor, you needed clean water. But these two wonderful things in the bottom right here had been invented by this point, which was, it's the thing on the left is an upper arm circumference band. It goes around the band of a child, upper arm of a child, and tells you whether they've got severe acute malnutrition or whether they're fine. And anyone can use it, a mother, a community health worker. And on the right is a high protein peanut bar that is in a seal foil and doesn't need any clean water. So both of those things could be taken out to the community. The fact that that hadn't happened was because people weren't prepared to fund it, because it felt risky. You were putting children's lives at risk. We immediately gave them £1 million. They carried out the study with the Mali government and the University of Mali, and within a year had proven that treatment rates were up 300%. So that's 3 children living versus 1 and under the existing model. And within a year, the Mali government had changed their healthcare policy and were very close to the UN recommending it as a global approach, which will go on to save, so far tens of thousands of lives have been saved, but will go on to save millions of lives if it's rolled out globally. And for me, that's the power of purpose, and living it and breathing it all the way through everything that you do as a company. A little West London drinks company having an impact on global healthcare because it followed through on its purpose. That's the power of it if you really commit to it. And so thank you for listening. And I hope some thoughts there for investors and leaders about the power of purpose.
Thank you very much, Douglas. That was great. I now turn to Hiro Mizuno, who was until recently Chief Investment Officer of the Japan Government Pension Investment Fund. Hiro, thank you for joining us. You need to unmute yourself, Hiro.
Hello. Hi. It is my honor to join this summit. It's just I definitely would like to learn from the other leader in the industry are doing, and I just the attending here and trying to speak for long-term investors like pension fund, which should be a guardian of the pension benefits for the several generations. And from that perspective, when I was a chief investment officer of the Japan Government Pension Investment Fund, as known as GPIF, we promoted integration of ESG in every aspect of our portfolio management, which to a large extent outsourced to the external money managers. You can name them, all the big guys from the BlackRock to Goldman Sachs, and in the UK, Bailey Gifford and Legal & General, and they are managing the money for GPIF. And we had a very deep discussion why we regard the ESG should be a core of our investment analysis and investment decision. And that today, that we are discussing about the purposeful business, and we talk more about the ESG. And over the last 2 years, when I was at GPIF, even after I retired from GPIF, I became one of the genuine believer in the power of the multi-stakeholder capitalism model. And then I think from the investor's perspective, by integrating ESG, environmental, social, and governance issue in the investment analysis and investment decision making, actually resulted in supporting the business who try to restructure their business model to serve multi-stakeholders, not only shareholders. And it's been very challenging for me and also the GPIF, because the conventional wisdom of the business, which is actually set by Milton Friedman 50 years ago, only the social responsibility of the government, other companies is to make profit, which actually interpreted in a way that how the pension fund manager should manage money, which is actually called the fiduciary duty, is just to make money. And it's okay to make money because that's the job of the CIO. But I really struggled with the concept that I cannot make money by taking those values and moral and environmental issues into the investment decision. That we pushed hard that that we even the investor should have a sort of like a double bottom line. But at the end of the day, our profession only be rewarded when we deliver long-term performance or long-term financial return for our beneficiaries. But I genuinely believe that there are better or worse way to do that, and we definitely trying to push the better way of doing it. And we concluded the better way to do that is promoting ESG throughout our investment operation. And at the same time, I'm the only, I'm actually representing investors' voice, but also I just wanted to represent the voice of the asset owners, because as you can see, as you know, that the investment chain consists of asset owner who owns the money, and asset manager who manage that money, and the portfolio company who got that money invested in. And that's that's construct the investment chain. And the asset owner is the root of investment chain. So the way we think really affect how the investment chain would operate. And one of the things I was really the concern about, and sometimes very upset, was while we call ourselves the owner, a lot of cases, we, as an investor, we actually behave like a trader rather than an owner. And there's a sense in our industry, owning the company is just owning the paper and trading the stock on the Bloomberg, right? So we just created together with the Carl Sturs, the California Teachers Pension Fund, and the USS, University Superannuation System of UK, to put together the statement, which we call the asset owner's letter, before I retired from the GPIF, which explicitly mentioned, the importance and also the acknowledgement of the multi-stakeholder model from asset owner's perspective. And we also explicitly acknowledge the responsibility of owner, because we have been talking about only what we are entitled as an owner, but we have been very shy in the way that we accept the responsibility as an owner, which should be the flip side of coin. So I think this is a great opportunity for the asset owners. I mean, facing this COVID-19 crisis, and also we are becoming more and more it's becoming more and more clear that the Paris Agreement cannot be achieved by sticking to the current way of the business and the current way of our consumption. So those kind of things are a great time for the asset owner and the investors seriously think about. And we definitely need to promote the long-termism, because all of these kind of things only make sense when we agree these are issues to be solved over a long time. So everything I was able to do in my capacity at the GPIF, I tried to promote the long-termism. And some of the things I advocate is, if the investor really want to support this kind of purposeful business, they really have to change their own evaluation method, because our asset managers, their performance evaluated annually and sometimes even quarterly. And the pension funds, the internal investment team are actually evaluated their performance on a quarterly or sometimes annual basis, which doesn't really create the foundation for investors to support the purposeful business. So I think this is something like in the corporate side, this is becoming a big agenda. And just to just before ending my my speech, I just wanted to raise one point, which is that I grew up as a Japanese, and I grew up believing the corporate has the other stakeholders than shareholders. And interestingly, for the last 20 years, Japanese corporate has been hugely criticized by the shareholders not paying enough attention to the shareholders. But all of a sudden now the world started realizing the importance of the company's purpose as also, in other way, multi-stakeholder model. And I attended a World Economic Forum where Dr. Schwab, in his opening remarks, he talks about the importance of the stakeholder capitalism. Also, he specifically mentioned that the investors using ESG. And he said that he was actually inspired 40 years ago when he visited Japan to discuss with the Japanese corporate leaders, and he got the sense of the corporate purpose. So after 40 years, I think we may be able to prove it, and I think everybody attending this summit definitely can play the role to prove it. I mean, rather than waiting for the market to prove it, we have to actively participate to make it the case. So that's what I think, and I'm really pleased to join this historic event organized by the British Academy. Thank you.
Thank you very much, Hiro, for those great insights. I now invite Phil Thomson, who's President of Global Affairs at GSK, to give his talk. Welcome, Phil.
Thank you, Colin, and hello, everybody, and thank you for the opportunity to make some comments on what is, as Douglas said, a very important topic. So I've actually been part of the GSK purpose journey for the last 20 years, nearly 10 of which I've been on the executive committee. And I actually joined a Glaxo Wellcome, which was a GSK predecessor company, as a graduate trainee 20 years ago. And I still remember very much the first day of walking into the company and seeing a very big banner in the offices, and the banner read, "Disease has no greater enemy than Glaxo Wellcome." And to me, as a graduate trainee starting work, that was incredibly inspiring. And it wasn't defined as purpose as such, and certainly not in the way that corporate responsibility has been defined over the last 20 years. But it was there as the essence of why we were all working for Glaxo Wellcome, and at that point, and what will become GSK. And that was the start of, in many ways, at least of my purpose journey. But I have to then tell you that the journey got very difficult, because sort of a year or so into my journey, the industry then decided, pharmaceutical industry decided to sue the South African government. And by doing so, ostensibly blocked HIV treatments. And that clearly was a lost sense of purpose. Now, I don't think it was a coincidence that this coincided with what was at the time a real decline in R&D productivity, impacting profitability and returns for the industry. And frankly, the industry becoming more famous for producing Viagra and Prozac than certainly some of the cancer treatments and other debilitating diseases that we see nowadays. And the idea of profits at the expense or being prioritized over a company's purpose has clearly been much debated. For the life sciences industry, purpose is absolutely intrinsically linked with innovation. Because by innovating, we deliver medicines and vaccines for unmet need, literally changing the lives of millions of people. But it also provides the basis for a sustainable business, and one that generates returns and offers resilience. So in this sense, purpose is both performance enhancing and risk mitigating. And if we think about where we are right now, COVID and responding to it is very much at the core of our purpose. You know, this crisis has really given us a very stark reappraisal of our health and economic resilience. You know, more than 400 deaths in less than 6 months, $7 trillion of stimulus, probably a 3-year journey of recovery from an economic perspective. You know, this is an incredibly challenging situation we all face. But we also, frankly, knew that this was coming. Since 2000, we've had 7 close calls when it comes to pandemic problems. And the reality is that there has been a serious underinvestment in pandemic preparedness. And the answer to this pandemic is ultimately innovation and vaccines. Vaccines are the clear exit plan. And there's no doubt that multiple vaccines will be needed given the scale of what is of the inoculations that will be needed here. Now, we're very involved in that as GSK, not least through our adjuvant technology, and we're working with multiple companies to do it. The good news is that we are seeing extreme technology leaps in vaccinations, in life sciences terms equivalent to Elon Musk and what he's just done with SpaceX. So COVID has been absolutely at the core of our purpose when it comes to innovation, but it's also been a great stabilizer for us. And it's when we've demonstrated with our business continuity of how we've maintained supply and our operations during these last few months, we have used and seen purpose as an extreme motivator for our employees. And in fact, we've just seen record engagement through our employee survey. So purpose has not only driven us forward on the innovation side, but it's also stabilized and helped improve the resilience of the organization. So over this journey, what have been the learnings on purpose? Well, I can tell you lots, but let me just point to 3 that I think are helpful to understand. The first is that purpose and embedding it into the company, as Douglas said, takes time and it takes consistency. For us, building trust, which has been at the core of our purpose, has been an absolute component of GSK's strategy for the last 12 years. And in fact, trust is now one of our 3 strategic priorities alongside innovation and performance. We've also worked hard to get a clear proposition of what is our purpose. And at the core of our purpose is innovation and access, underpinned by a commitment to quality, ethics, and of course, our people. And the third area is the importance of values. We have 4 values at GSK: transparency, respect, integrity, and patient focus. And these are very much tied to the purpose, and they offer the opportunity for authentic leadership, but also very importantly, in an organization with 110,000 people operating across 136 countries, simplicity. They help guide the day-to-day and, very importantly, guide in a crisis, as we've seen with COVID. So where does the investment community fit in here? Well, there's no doubt that investors are a very powerful force for purpose. As equity holders and providers of capital, they can absolutely drive change in sectors and companies. And I think we're seeing a lot of progress here. Concepts of stakeholder value, investors leading calls for focus on long-term value creation, a massive increase in the attention to ESG focus, with now something like $30 trillion of global sustainable assets under management. So enormous progress, I think, is being made here. But there's also quite a long way to go. The focus on ESG is very, very welcome. But we have multiple ratings, indexes, and analyses. And we need to get to greater clarity and consistency. Now, this is coming, but there is a need to coalesce around a set of common indexes and standards. TCFD disclosures on climate change really show, or climate-related matters, really show the way forward here. And if we can accelerate beyond that, then that will provide more consistency and more clarity, I think, for investors, but also for companies working for them and with them. An important part of this, I think, is also the ongoing dialogue between owners and companies, using a common language, common and approved feedback mechanisms. And certainly adopting the Sustainable Development Goals is a sensible and helpful framework that both companies and investors can use together. Alongside reporting and standards, investor support for legislation is also important. We're seeing constructive company law requirements for greater board accountability and oversight to purpose-related matters, and those should be welcomed. Investor support also for more general legislation that supports sustainable purpose-type activity, like, for example, the European Green Deal, also makes a lot of sense. But to me, the really exciting opportunities, I think, come when we think about the investment community's role as a social change driver. As asset owners, there is a big opportunity to affect profound social benefit. And as Colin and his research shows, a responsibility to do that as well. And we are seeing this. For example, I think investment community is really strongly influencing companies to adopt measures on climate change and supply chain worker rights. And many investment community institutions are also adopting bold purpose strategies, supporting local communities, and are working hard to reduce inequalities. BlackRock, JP Morgan, Lloyds here in the UK are all great examples of this. But we do need to do more. We face systemic issues and risks. Mark Carney likes to say systemic issues and risks with climate change, and I completely agree with him. And not all of these are factored in by the governments, companies, or markets. COVID has proven that. This is a threefold crisis: health, economic, and inequality. And we need to be better prepared. And that requires scale and bold action. For example, we could create a new global biopreparedness network of scientific facilities at the service of all nations, focused on pathogen screening, antigen development, and surge manufacturing, all the components that we need right now to tackle a pandemic. And this network is entirely feasible and will be ready to protect the world. But it needs scale and bold thinking across public and private communities. And more broadly, we need to think about recovery and how it improves health resilience. It should be a key goal for an investor perspective. Improving health resilience represents both an ESG risk and an opportunity for capital investment and returns. Investing in private and public opportunities to improve health resilience and move capital away from sectors that devalue it is something the investment community can and could facilitate. It's an opportunity, frankly, to improve the health and protect hundreds of millions of people. As COVID has shown, public and private sector engagement is critical. This sort of engagement is the hallmark of a purposeful business, one that's part of society and contributing to the challenges we face. And the investment community are and will and can be a major part of this. I believe we should actually be optimistic about how investors can support purposeful business. There is increasing evidence and examples of it. At the same time, we need to accelerate. At the UN Global Compact last week, it was pointed out we have less than 4,000 days left to reach the targets set for the 2030 Agenda on Sustainable Development. So we shouldn't hold back. After all, helping build a greener, fairer, safer, and healthier world can be a point of purpose for us all. Thank you.
Thank you very much for that, Phil. It was really great. And now turn to our last speaker, Deb Oxley, who is Chief Executive of the Employee Association. Deb.
Thank you, Colin, and to the British Academy for inviting me to this summit today. And well done on elevating the important issue of purpose. The topic of ownership is often centred on investors, but today I want to use this time to explore how employee ownership can also fundamentally affect the ability of companies to be purposeful. I've been watching and listening over the last couple of days to the various other contributors, and I've heard many of them speak about the role and importance of employees in the debate about purpose. On Monday, Ashley Grice spoke about delivering purpose through humanity, and Alan Jope about his belief that people with purpose thrive. Yesterday, you suggested, Colin, that some observers might consider the E in ESG being better used to describe employees. And of course, Francis O'Grady spoke about the importance of ensuring workers have a voice. So my contribution today is building on that, but also suggesting that there is a problem with purpose. Whilst everyone accepts that purpose is essential if business is to do good as part of doing well, simply having purpose is not enough. Businesses must find ways to bring purpose to life so it becomes part of their DNA. Because purpose has to live in everyone's actions if it's to be realised. So the problem associated with purpose is, how do you make it real? As we start to emerge from this crisis with an opportunity and a need for bold ideas, if we're to confront the collateral damage of COVID-19, including increased inequality and a lack of financial resilience, the big idea I suggest is ownership by everyone. That is, giving everyone in every business both a stake and a say. There's 5 key reasons why I believe that we should unlock the power of ownership now. Firstly, ownership by everyone in a business brings purpose to life through a new narrative. It changes the language from me to we, from mine to ours. Just think about the power of our NHS in the current crisis and the sense of shared responsibility and care brought about when every UK citizen felt vested in our National Health Service. Shared ownership overcomes the us and them that often defines the worker-management relationship, and which is often reinforced by narratives which speak of them having different interests too. And shared ownership connects everyone together in codependency and cooperation, as everyone recognises the role that each individual plays in the whole. Secondly, purpose-led businesses often need different measures, and when everyone has both a stake and a say in the business, it changes the culture that supports corporate performance. Instead of division, it brings unity, around that common purpose. Instead of confrontation, it brings harmony as people collaborate rather than compete. And instead of imbalance, it provides equality as people share the load and the lift of business. Thirdly, in order to embed purpose across an entire organisation, we need to distribute responsibility for that purpose to everyone, as Phil mentioned. And shared ownership does this. It creates shared purpose around decision making, especially important in difficult times. It encourages people to step up, literally to take more ownership, and it empowers people to act with more duty and care. Fourthly, having everyone involved in ownership inevitably forces more long-term thinking, which of course a couple of our previous speakers have spoken about today. It changes the focus from short-term wealth creation for the few to long-term value creation for the many stakeholders involved in a business. It drives more innovation. How to solve problems becomes everyone's challenge, with the best ideas often coming from the shop floor. With employees involved in ownership, there is also more consideration of local impact, particularly important when you think about local economic resilience and supply chains. And the long-term thinking and planning often results in greater operational and financial resilience. Finally, having everyone involved in ownership strongly links corporate performance to shared reward. Having ownership creates shared endeavour, which in turn creates that shared reward. Reward becomes proportional rather than discretional. It's not about a job title, but about everyone's contribution. And shared reward means that everyone benefits from success, reinforcing the power of purpose. So how do we create more ownership in the economy? Arguably, there's probably some low-hanging fruit that we could attack. Education's really important through FE, HE and professional bodies. If we have more enlightened business owners, we'll have more shared ownership. And of course, government can incentivise more employee and shared ownership through tax incentives, simplifying legislation and reviewing current approaches to shared ownership. Whilst both of these will increase the levels of employee ownership, especially in privately owned firms, a step change to achieve broader ownership across the entire economy requires more radical change. Firstly, all employee equity ownership of businesses, even in a minority form, via trusts and shares, needs to become the absolute norm. But it needs to move from being a topic in Treasury and listed markets, primarily only concerned with executive reward and long-term incentive plans, to being grounded in the economic and social impact to be had of ownership on purpose, productivity and equality. In the UK, this would mean a national review of what policies and interventions are required to build a truly sustainable and inclusive stakeholder economy. And secondly, there needs to be more prioritisation on the role of individuals in a business. COVID-19 has shown how essential every employee is, regardless of their title or salary. We need more respect for the individual role that employees play in a business, which is, after all, simply a collection of people. Focus in recent decades has been on the role of finance and executives. We need to rebalance this in favour of employees. In the UK, this would require the same attention to employees as a group that is afforded to businesses as entities, at least across all government departments. So in summary, purpose is essential, but it will only be realised when everyone involved in a business takes ownership of delivering it, which includes investors, and employee ownership helps to create the structural and cultural environment to realise purpose. Thank you.
Deb, thank you very much indeed for those very insightful observations. We've had a large number of questions come in. So what I will do is I'll ask each of our speakers to answer a question and then see if there's any time left at the end. So Douglas, there's been a question about, there are stories of smaller purposeful companies who've been acquired by multinational corporations and had to scale down their focus. How has Innocent been able to avoid this, and what did you do to manage that process?
So obviously, I think, historically there have been loads of those examples, and I'm hoping that, as I said in my talk, bigger companies are going to work out how to curate purpose-led businesses inside a kind of wider ecosystem, rather than force fit new businesses into their existing model, because that's when the failure happens. For us, I think we were lucky that we had what I describe as our dating period between 2009 and 2012. Coke were a minority investor, and during that period of time, we worked very hard at building trust between ourselves. So we didn't sort of hide behind the wall of, well, you're just a minority shareholder. We very much opened up to them and showed what we were doing, that we were responsible and capable, and for our kind of business, what we were doing was very appropriate. So by the time we got to 2012 and they acquired 100% of the business, at that point I took over, and James Quincy, who's now the CEO of Coca-Cola, sat down with me and said, well, it's working. We trust you. You're growing. Should we just keep going like this? And we were like, great. And literally from that point on, it felt like the trust had been established, and therefore, it's continued in that vein. But it is, you have to constantly work at it. It's not something that, it's about human relationships ultimately. The rules are the rules, but big companies do like to conform things, and you just have to constantly be building human relationships and trust inside the model. But for us in general, it's worked very well.
And just a follow-on question that came in is, did Coca-Cola learn anything from you?
Wow. I hope so. I think actually you've seen in the last 12 months, Coca-Cola have launched a very clear purpose for the whole of the Coca-Cola system. And I think, in some small way, James Quincy, who was the sort of chairman of our investor board, hopefully some of that rubbed off, and now he's CEO of the whole of Coke, them launching purpose, that there's some form of credit that we can take in terms of what they learned from Innocent. But, I think all big corporates, big companies are having to get really clear, because the demand's coming from inside the business, and employees, and Deb was talking about the role of employees. Employees have an increasingly strong voice, in this, and through your engagement surveys, why aren't we a B Corp? Why haven't we got a purpose? All of those things, management are having to listen. Talent is a very special thing right now. So for employees, use that voice inside the company. Leaders are listening. Things are changing. So take advantage of that moment and try and make change inside your company if it hasn't happened yet, because internally people do have power, probably more than they realize.
Thank you very much. And if I can turn to Hiro, there's a question about how can long-term investors persuade short-term investors to take a longer, responsible, purposeful view?
Well, that's a $1 million question, and actually I tried many things to do it, but including the GPF's decision to suspend the stock lending program, because the particularly short-term oriented investors, including hedge fund, they use the short selling in their investment strategy or investment tool. So given the as I said, the promoter or guardian of long-termism in the capital market, the GPFs is providing the stock for short selling, while we are engaging with the corporate executive to address long-term issue, is not consistent. So we suspended it, and but that one we got the huge pushback from our own industry, saying like those stock lending, short selling is really providing a liquidity to the market, and liquidity is essential for the price discovery mechanism of the stock markets, etc., etc. But through those experience, which I try to sometimes take a tool away from short-term investors to make their job more difficult, and we did several other things to make it happen. But at the moment, I'm more inclined to say that those investors, group of investors will remain as the short-term trader anyway. And we just don't have any authority to tell them to change their investment strategy. But what we could do is, and which, you know, I was explicit in our asset owner letter, was if the long-term investors or the people who call themselves long-term investor act like a long-term investors, you know, balance will shift more towards long-termism. Right, that's the hope and the impact I try to make on the industry. So at the moment, as I said, the most of and majority of long-term investors don't act like a long-term investor anyway. So we need to educate long-term investors. They invest like they talk, and at the same time, we cannot reduce the number of short-term trader because now the machine can trade the stock at the nanosecond cycle. So that we have to face the situation. We will see more and more short-term, even a nanosecond cycle traders in the market, in a daily trading, which increase the volatility. So that's why I think the long-term investor, like a pension fund, have to assume our own responsibility to become an anchor. To keep the stock market away from falling into the real short terms.
Okay, and do you think that there's another question? Do you think that there are many model examples of institutions doing this really well?
Well, I think the several the pension fund finally starting make this commitment more publicly, and the asset owner letter I just mentioned, which is posted on the GPEP website. Now we have, I think, the more than 15 public pension fund from the world, that sign up to the letter. So we actually, getting more momentum among asset owners. And now some asset managers, some of the names you guys mentioned, really change their thinking, their mindset in terms of sustainability. Because some of the CEO of the major asset management the company called me a religious leader 5 years ago when I promoting the sustainability. So now he's saying that's their real the core of their business model. So I see a lot of like a positive sign, but we just need to be more more bold in assuming the responsibility as a long-term owner.
Thank you. Phil, there's a question that's come in about whether R&D activities are appreciated enough by corporate analysts and in sustainability ratings and scorings, etc.
Well, I think certainly the analysts that follow us and our sector are deeply appreciative of R&D. I mean, this is the core investment proposition of the company. I think you can see that in the ratings that are attributed to the companies and the value that's ascribed to pipeline. So absolutely, I think the market recognizes that. I think on ESG ratings, I think we're seeing quite a change there. And I, from my own experience, I'm seeing, very notable analysts in in life sciences who are now commenting much more overtly on ESG, who are writing, frankly, analyst reports which you wouldn't have seen, 5 or 6 years ago. I'm seeing corporate broking teams investing in ESG experts to help them. So I think the research side is moving, at quite a pace here. As I said in my comments, I think there is still a real need for a coalescence around some of these different frameworks and standards. But I think we should be optimistic that actually the investment community is moving, as I say, at quite a pace here.
Great, thank you. And Deb, there's a question which asks, current differentials in pay are a great cause for division. How is this to be tackled by employee ownership?
That's a good question. In businesses where there are elements of employee ownership, whether that's minority or 100%, alongside that ownership structure comes a different approach to corporate governance. And we've heard about the employee voice, and Douglas talked about that, and there was certainly quite a lot of talk about it yesterday in the session on stakeholder ownership. That corporate governance means that there is more transparency of information, and that transparency and that shared ownership together have tended to moderate, I would say, in most cases. So what you often hear spoken of in businesses where there is majority employee ownership, or at least a more than 25% percentage of employee ownership, you often hear about that differential being substantially less than what you see in listed companies. So I think it is addressable, but I think it's, as Douglas said, it's the pressure of the voice of that collective group of employees, really only speaking truth to what the rest of the world is saying anyway. But quite often many executives seem to be shielded from that truth and think that they can operate in a different sphere. And we've seen examples of that in the crisis, haven't we, when there's been some pretty appalling executive behaviour, actually, which has led to people reinstating salaries and bonuses as we're only just emerging from what has been the worst economic crisis of our times.
And one other question, if I may, and that is, I agree purpose needs to be real, but does employee ownership automatically do this? How can it be made to work?
No, I mean, there's a saying, you know, employee ownership isn't for Christmas, it's for life. You've got to invest in it. It's a cultural and structural change to how a business is owned, and nothing's guaranteed unless you invest. And I'm sure GSK and Innocent are exactly the same. You know, they're investing heavily in cultural development, employee engagement, and, you know, alongside the ownership stake that happens in employee-owned businesses is the need for a strong ownership culture. And that challenges leaders, because it forces leaders to change behaviours, probably to be more transparent, to take longer term in terms of decision making, but the quality of the decisions are better at the outcome if you engage more and consult more widely and get more voices in the room. But with that in mind, then having that collective effort together behind that shared purpose can only be a good thing, when it's not just owned in the boardroom, it's owned across the workplace.
Okay, and just coming back to you, Phil, on this area, there's a question about whether or not unions can give a voice to workers, or whether it's a history of conflict that makes it more difficult to manage a purposeful company. What's your sense in GSK on that?
I think the short answer to that is yes, we do see that. I mean, we're obviously a company that has quite a spectrum of different types of working, whether it's scientists in laboratories, or, you know, manufacturing staff working on sites generating, through to administrative side. So we have a spread of union type support. I think this notion of employee ownership that Deb's talked very eloquently about is absolutely right, and it's something that, frankly, we've been tapping more and more into over the last few years. And actually, it's, for us, it's about how do you get employee ownership into at the sort of broadest level around culture, but also very on specifics. And just to give you a very quick example, you know, we ask all of our people to be very clear about pharmacovigilance, you know, watching for when and if a drug, if an event occurs around a drug, and if they become aware of that through social media, or through knowing people outside of work, or whatever it might be. And that as a sense of ownership, you may not think that's quite as obvious as employee ownership, but as a sense of ownership around the business, that kind of thing, I think, is something that we more and more so we're encouraging, not least to build around a sense of responsibility and purpose for the company.
Thank you very much indeed. And thank you very much to all of you. And any unanswered questions will be answered on LinkedIn, and we'll try to answer questions that still come in on the Slido after the event. But I'd just like to conclude this then by thanking all of our speakers for a really great session and for contributing to it. In the final session this afternoon, we'll be learning the lessons that can be learnt from crises for producing solutions to the problems that we will face in the future. So thank you very much indeed for joining us, and I hope you'll be able to join us later today. Thank you.